Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Flip Pidot of American Civics Exchange. Thank you for joining the Contrarian Investor Podcast today.
Oh, you bet. Thanks for having me on.
Yeah, thanks for coming on. I'm very excited about our conversation. We are going to talk all things U.S. election. We are possibly going to veer a little bit from the financial markets and talk just about the outcome of Tuesday, November 5th, and the various ways that this can play out. And we'll talk later about your firm and what you do and how you're able to track the various bets on the various outcomes. But let me start off just by asking you, what are you seeing here in terms of the election, in terms of how investors, and you've access to some, institutional investors as well, are playing this?
Yeah, I mean, the sort of top line, the headline is that what had seemed kind of like a toss-up in the polls, in the markets, and conventional wisdom has more genuinely changed now in just the last couple of weeks, basically since the beginning of October, to one where Trump has a meaningful lead, where he can be considered a favorite, outside of what would be a true coin flip, not a heavy favorite, maybe 60-40 Trump, but that seems to be borne out in the battleground state polling, especially more so than in the national polling. Certainly in the prediction markets, there's been a pretty wild swing, at least compared to how relatively stable the race has been, at least since the point of greatest instability when Biden was withdrawing or considering withdrawing. But just in the last couple of weeks, it's gone from Harris being slightly favored to Trump being quite a bit more meaningfully favored, and it's moving fast now. It's moving, maybe even a percentage point a day in terms of that gap expanding. So between that, rumors from inside the Harris campaign, they're getting really worried about states like Michigan and North Carolina, which if they can't hold those, along with potentially Pennsylvania as well, it might not even be that close of a race. So 2 weeks to go, lots can change, but overall, we're starting to see a bit more conviction now that this is Trump's to lose.
And as far as the control of the House and the Senate, where are things shaping up there?
Senate seems like it's almost a lost cause at this point. We've got Republicans at about 80% to win. House a little bit closer. I think still. I actually pull it up here as we're talking. Republicans still favored to win, but this is looking at Polymarket, which is often the highest volume market in any of these contracts. They're showing actually exactly 50-50 chance now, but that's down over the last week from Democrats being favored, say 55-45. So it looks like a true Republican trifecta, while not the odds-on favorite in terms of the overall outcome and balance of power is a real possibility now.
It seems to be that's where things are trending.
Yes.
Yeah. Well, and so what does that mean in terms of the types of, I guess, unknown unknowns and geopolitical events and political risk that people are looking to hedge? Let's assume that Trump wins and that the Republicans sweep the Senate and the House.
Yeah. So it really depends who you are, what your business prospects are, how your portfolio is positioned. I mean, there are certain things that both candidates make clear are their priorities, whether or not they make good on them. But things like extending the Trump tax cuts, that will happen if the Republicans have a trifecta clearly. To one of Harris's earlier proposals that she actually backed off of because of bipartisan, blowback, but the idea of taxing unrealized gains on investors, that would have, I think, a pretty across the board negative impact to anyone with significant, equity or other financial market holdings. And so that could be something that people are wanting to hedge on Harris's side. There's an interesting dynamic at play actually in the prediction markets, especially poly market, which I mentioned previously, and we don't have to go all the way down this rabbit hole yet, but just because it relates to your issue of hedging, there's been about $40 million pushed into pro-Trump or anti-Harris positions on poly market over these last couple of weeks. We've seen the prices diverge. And there's a lot of speculation about, is this someone trying to, falsely push the price in Trump's direction? But those that suggest that aren't even sure. Some say it's because they want to pretend Trump has more momentum than he does. Others say, no, it's to make the Harris campaign and Harris supporters not get comfortable and get motivated, knock on doors and give money. Or is it a natural hedger, right? Is it someone who has a lot of exposure in maybe DJT, the Trump's Truth Social holding company? Is it someone who is subject to tariffs? In other words, they might have a significant overseas business. There's actually one person that's a rumored, possible string puller behind these big poly market accounts who does and did experience a significant financial loss, at least in their equity holdings during Trump because of tariffs on luxury goods. So it's hard to know. We may never know. And if we do ever know, it probably won't be till after the election, who are the folks that in this, really kind of golden age now of real money prediction markets, who are the ones availing themselves not simply of the speculative or sort of entertainment angle of these markets, but actually using them for, what's really their ostensible purpose, right, is as a risk management tool, information markets, future markets, to be used for commercial hedging. So I think it'd be really fascinating if we do learn that at least some of the major institutional money going into these markets is being used for exactly that purpose. In other words, that you're betting on the candidate you'd prefer not to win, or the party that you'd prefer not to be in power because you want some insurance against the financial downside you'd experience should they win.
Mm-hmm. Yeah, one suspects, what is it, Occam's razor, or the most logical, the most reasonable explanation is also the most likely one.
Right.
So it probably just is, like you said, one would suspect maybe somebody just looking to hedge their bets, or either maybe just make a little money on based on where the polls are going.
Yeah, exactly. Could just be someone who's a true believer, not necessarily an ideological believer, but someone who believes that Trump really is favored. And it's been interesting, too. We track this a lot on one of our sites to see, the prediction markets versus the polls versus the polled-centric forecasters. Which one is leading the other, right? So if you're arguing that the prediction markets are manipulated by someone who either has the incorrect thesis that one candidate is underpriced, or by someone who actually wants to manipulate the electoral outcome by falsifying momentum, then you shouldn't probably see the pollsters and forecasters follow suit. If, on the other hand, you think that markets are efficient and the best distillers of a lot of heterogeneous, disparate information that the pollsters, which have a temporal lag, and the forecasters that derive their forecasts from the polls, then that's what you would expect to see, right? You'd expect to see these trends emerge more readily in the prediction markets than you would in the pollsters and forecasters. So that's the side that I, as a general heuristic, tend to come down on. Especially now, you've got more and more data. You've got early vote and mail vote data that pollsters aren't going to see, or they're not going to incorporate into their numbers, nor are most forecasters anyway. So I'm hopeful that we'll continue to see that the prediction markets tend to be leading indicators rather than laggards, or in the worst case, false signals by would-be manipulators that are not then borne out in the polls forecast, and of course ultimately in the actual vote results.
Yeah, what does the history tell us about this? I mean, these prediction markets are pretty new, unlike polls. Have they been proven to be accurate at all, or do we know how much do we have?
Yeah, they've proven to be pretty accurate. I mean, in recent cycles, you've got a couple of sort of surprising outcomes, right? Or surprise one side and not the other, I guess. In 2022, you had the rumored red wave turned into the red trickle, the red mirage, whatever you want to call it. In 2020, you had sort of the ultimate, 2016, you had the ultimate black swan event of Trump winning. And yet, if you look at the prediction markets, they might have been saying 25% chance that Trump would win in 2016, which was a higher chance than virtually any other forecaster. I think Nate Silver, then of 538, now of his own shop, Silver Bolton, it depends on exactly when you measure it, right? Midnight going into election day. But he, at least at certain periods, had Trump at an even higher percentage to win. But by and large, if you look at the prediction market pricing writ large versus the sort of pro black box forecaster, community writ large, prediction markets have done quite well. It's not to say they aren't without their big egg on their face misses, but and also, as you said, they're new, and so it's hard to read too much into a track record, especially when the last two cycles, if you include the 2022 midterms, were beset by so much COVID specific anomalous factors that it's hard to draw too much of a lesson in terms of their overall accuracy. But I think those who are general believers in the efficacy and efficiency, informational efficiency of markets, will probably take it almost on faith that they're going to be as accurate over time as anything else. Because, of course, the prediction markets are all downstream of every bit of public information coming from pollsters and forecasters, right? So except for internal polls, which often get leaked anyway, the markets have access to every bit of information that the forecasters do, and probably more. And so if the signal coming from the forecasters and from the polls is consistently worth anything, that's already baked into the prediction market price.
What about early voting? And obviously we don't get the states don't release early polling, but we have exit polls, which are pretty reliable usually.
Right.
And what is that telling us? Could that also be driving things here?
I think it could. Now, again, I'll come back to it again. The mid-COVID versus post-COVID eras are so apples to apples that I certainly can't disaggregate them. But we are getting a lot of information coming from Nevada, especially as one. Florida is it may not be a true swing state this year, but they're giving a lot of very good granular information. And thus far, I think it's safe to say across the board, at least the numbers I've seen from the swing state early vote and mail vote, is that Republicans are doing not just better, but much better than they did in 2020, 2022, just in terms of their return rates, their participation in the early voting methods. And yet in 2020, maybe less so in 2022, Republicans were actively discouraged from using those methods and told, by Trump that they were not safe, not reliable. So, and this cycle, for the first time, they're being actively encouraged to use it, right? So yes, Republicans are doing significantly better. I think, at least just based on the numbers, that's pretty universally agreed at this point. But it's, how do you disentangle that? Is it because it's now post-COVID and they're being encouraged to use it? Or is it because they're really, really in a much stronger position? And that's not to say they're not disentangleable. Doing so is beyond me, at least.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information.
But it certainly would be plausible that as that early vote data has been coming out now for the last few days, and Trump's divergence from that, soaring above that 50-50 line has only accelerated, it would certainly seem plausible that that could be a factor, that folks are looking at that and are saying, yes, okay, sure, maybe some of this is a post-COVID effect, but this is a big enough swing from those sort of very early telltales that maybe, even though Trump's ahead by, I think, on average about 1 point in all the key battleground states, at least on average, maybe there is going to be another Trump-friendly polling miss this time around that we don't necessarily need to trust that the pollsters have figured that out. And if there is anything like the polling miss in 2020, 2022, then Trump wins pretty handily, right? Because Clinton won by 2 points in the popular vote, obviously lost the electoral vote, but was ahead, and I've forgotten the kind of final analysis, 5.6 points, something like that, going into Election Day. Yeah. Same with Biden, who was ahead by 10 going to Election Day and won by 4.5 or 5. So if you have a similar magnitude of 4 or 5 points toward Trump, and he's up 1 already in battleground states, then we're not going to have that protracted aftermath of litigation in trying to deal with this after Election Day. But that's the big if, right? The pollsters have tried to fix it, and they have different ways of weighting their samples now. And, is the notion of the shy Trump voter gone anyway? Are people now just sort of all out of the closet and loud and proud? They certainly are in terms of rallies and everywhere else. So maybe they're even overcorrecting, right? Maybe there'll be a pro-Harris polling miss. It's one of those things that's really hard. It's really hard to disentangle with any kind of real confidence. And again, so I think the best we can do is look at the markets where you do have people putting down real money with real stakes that have a real incentive to comb through all of this granular, disparate information, including what all the polls show, what all the forecasters suggest the polls mean, and what all the early voting data means. Just like in the stock market or any other public financial markets, that sort of mosaic analysis of millions and millions of different data points, and at least in this case, tens or hundreds of thousands of individual traders, that ought to give us the best indication of what are the fair odds of any of these outcomes.
Yeah. Tell me about the American Civics Exchange or this website and the type of, I know it deals with derivatives and where institutional investors, at least not the public, can I guess, bet or trade.
That's right. Yeah. So our site, our platform is different from the sort of traditional exchange model prediction markets, which are public facing. They expose an order book. You trade against other traders. You can see what the current price is. Ours is a much more sort of niche offering where it's only eligible to very strictly qualified high net worth individuals or institutions. And so it's a much smaller population that we can deal to. And so we deal these products which structurally look quite similar. They're binary outcomes based on a political or economic event. But we deal them as over-the-counter swaps rather than trading them on an exchange where anyone can come and fund an account and buy and sell against other traders. But on one of our other sites, or one of our content and analysis sites, which is called the Supermodel, is at thesupermodel.com, we actually seek to aggregate. It's really new, but I encourage people to take a look at it because it's become, I'm biased, but my favorite dashboard for looking at the election. So we're looking at all of the prediction markets, from the regulated ones like Kalshi and Interactive Brokers to the crypto exchange I've mentioned a couple of times, Polymarket, which is by far the volume leader of all these markets. Then to more established ones, albeit smaller ones like Predictit, but also play money markets like Manifold markets, non-money markets like prediction platform Metaculus. And we even throw in Nate Silver Bolt and forecast there for a little bit of flavor, because again our goal there is to provide the single best indicator of what are the true odds. And while that informs for our purposes a very heavily market driven signal, we're not simply trying to be a market aggregator, although it's most of what we're doing is applying a subjectively weighted average to all of these different markets and prediction platforms. But we also recognize that there are times when markets will hurt or become temporarily irrational or can even potentially be manipulated. And so we like to have a little bit of a kind of stick in the ground there to hang on to in those cases when markets may get a little wonky. And when the forecasters that are digging through the fundamental data may be on to something to the extent that they diverge. But you can see all that in visuals that sort of show our aggregate flowing within this band that shows the whole spread of all of these different aggregate constituents, from the actual prediction markets to play money platforms to Nate Silver. And again, as we sort of talked about at the top, the headline is really unmistakable. From at least the course of month to date, which is now we're 3 weeks into October. Prior to that, it was sort of that slight Harris edge. Then it sort of flipped, went truly 50-50. And just the last couple of weeks, you've seen this major divergence where Trump is now over 60 cents, over 60% to win on most of the real money platforms, or at or above 60. And even the play money ones that tend to lag a bit, Nate Silver, which tends to lag a little bit more, they all have Trump favored. It's just a question of by how much. But for us, it's been, and I think from our readers and folks who are sort of eagerly subscribing as we're putting this out, are finding it's not that what we're doing is brilliant. It's that the story that's being told by the underlying data, when you do aggregate it and put it all in one place, it's speaking with a really loud voice about what the market writ large thinks is happening here. And it's no longer that you can't tell, it's super close, it's a coin flip. That may be the underlying reality, but it's not the reality. It's not the consensus of all of these market participants. It's quite different and quite better news for Mr. Trump.
Yeah. Do you look at the FX markets at all? Because the Mexican peso trade in 2020 famously kind of did predict No, yeah, in 2016, sorry, did actually predict Trump. Do you factor that in at all or not so much?
We don't. It's certainly an interesting place to look, and I would certainly expect that is an input into a lot of prediction, at least the larger prediction market traders trading activity. Those are much deeper, more liquid, broader markets than even the largest multi-billion-dollar prediction market platforms. And so, if there's edge to be gleaned from those insights, they're going to make their way into the prediction market pricing pretty shortly thereafter, I would think. So, I hope and expect that a lot of that, to the extent it is good signal, is already imputed in our aggregates. But no, it's not something that we look at, in isolation.
Fair enough. All right, Flip Pidot, I want to take a short break and come back and ask you some more questions about the upcoming election, maybe other things. But let's first take a quick break and give our sponsors a chance to be heard. If you are a premium subscriber, you will not get the break. Do not touch the dial. We'll be right back. In fact, we already are. And everybody else, to become a premium subscriber, visit the website contrarianpod.substack.com and sign up.
We hope you're enjoying this episode of the Contrarian Investor Podcast, where we give voice to those who challenge a prevailing narrative in global financial markets. Consider becoming a premium subscriber. For $9 a month or less, premium subscribers receive a number of benefits. Podcasts are posted immediately after they're recorded. Transcripts are made available within 24 hours. Premium subscribers get direct access to the host, and of course, there are no ads or interruptions. Visit contrarian.supercast.tech for more information.
By the way, you don't need the .tech suffix to get to that website. .com will do the trick. And we also have a Substack that where you can sign up for the same prices, same benefits, same details, contrarianpod.substack.com. So if you already have a Substack account and use it, or have the app and use that, that's probably the best way to go. So contrarian.supercast.com or contrarianpod.substack.com. Whole bunch of benefits, including, of course, getting this episode up to a week early without ads or annoying announcements. And you also get the daily Contrarian briefing and podcast that is released every market day morning at 7 a.m. This is a contrarian take on the events of the day ahead and what is likely to move markets, such as economic data releases, earnings, and other things. It is really good, and that is completely unbiased, of course. So check that out, contrarianpod.substack.com or contrarian.supercast.tech. Now on with the show. Welcome back, everybody. Here with Flip Pidot of American Civics Exchange and the supermodel.com. Flip, this is the segment of the show where we ask our guests to tell us more about themselves and how they got into the world of investing to begin with. And in your case, I'm not even sure if you have a background as an investor, but how you came to run these models and study these things. So yeah, take it away and tell us.
Sure. Yeah, I have been involved in investing, although not as a primary focus for the majority of my career. But I worked in a buy-side research firm for a few years after business school. I went to Darden Business School at UVA, and have always kind of had this perverse combined interest in politics and financial markets, and in particular at the intersection, of the two, the influence of one on the other. And the sort of founding philosophy behind American Civics Exchange now quite a number of years ago was that, the same way that futures markets are used to hedge some kind of external risk, right? The price of precious metal, the price of an agricultural product, whether it's going to be too hot in, the farmland this year to grow as much of your, a crop that's important to you, interest rates, foreign exchange, basically, a method, a centuries old, tried and true method of efficiently hedging virtually any standardizable external risk. My thinking was simply that, well, politics and policy in particular public policy represent the absolute largest and otherwise fully unhedgeable, at least in ways that we don't scoff at, unhedgeable category of financial risk. And so it seemed to me when we started this, actually back in 2007, that was sort of the promise of these markets, that eventually it would be a tough regulatory road, but eventually the demand would be so significant that it couldn't, fail to exist interminably, and that once they matured, they would become a really significant part of the commodity, what's seen as the more traditional commodity futures industry. We by we I mean the industry, and largely firms outside of ours, have made amazing strides in the last 3 years towards that. And of course, this year you've got, well, 3 years ago you had Kalshi come online as a regulated DCM, trading a number of non-electoral but still political and socioeconomic event futures, binary event futures. And then, of course, just this year, following significant court battles, both Kalshi and now Interactive Brokers are listing actual election futures on regulated markets. So I still don't think we've captured the bulk of the, in my mind, enormous institutional natural hedging exposure of public policy. The dam has really begun to crack, I think, and especially as we talked earlier in the program about what's going on at Polymarket, should that or anywhere else turn out to be a natural hedger putting real money behind this to insure against the perceived economic downside of one side winning or another, will be looked back on, if that turns out to be the case, will be looked back on, I think, as the first real significant use case that proves this longstanding thesis that these markets need to, and so strongly need to, that they ultimately will have to exist right alongside what we have come to know as sort of traditional commodity futures. So that was sort of again, as I said, the original founding philosophy. But I've been involved in political campaigns, including having run for office a couple of times myself. Again, it's sort of a longstanding perverse interest in both of these fields. And where I sit now, that precise crossroads between the two is just sort of exactly where I want to be working. It involves financial product innovation, financial market engineering, market microstructure design, all the kind of stuff that sort of exchange nerds love digging into, and what makes prices more efficient, what leads to bias in pricing, and how can you arb between different markets, or how can you design market mechanisms that are more efficient, weed out some of those inefficiencies. For a few years, I worked as a consultant for doing market curation and data analysis for Predicted, back from their founding in 2014 through about 2019, and that was one of the things that we were facing during that period, is how do you design a market mechanism here, wherein they had and still have certain other restrictions like fairly low position limits and a cap on the number of traders that can be in any market, that at some point kind of stifles the signal of the smart money, or it makes it harder to counteract the signal of the dumb money, right? If you have a position limit and you have only a certain number of traders can get in. So it came down to, okay, how can you more smartly engineer these contracts, especially, this is a whole separate subtopic, but logically interrelated contracts, to make liquidity and pricing more coherent and more efficient. So that's just all stuff that I'm really interested in, and just the general spectator sport nature of politics that I think a lot of people decry as a bad thing, and I don't necessarily think they're wrong, but it is still something I very much enjoy about the field of political science and electoral handicapping and things like that. So we're doing at American Civics Exchange really fits nicely into that nexus between these two little worlds, and it seems to be one that appeals to a number of other people too, just in terms of the conversations we have online with followers and subscribers and traders, and certainly the increase and the increased awareness of and participation in these other public-facing prediction markets has generated, quite a nice little, let's just say, cottage industry community, but it's not even that anymore. It's really burgeoning. It's and increasingly interesting and entertaining. I mean, you've got so many podcasts, YouTube shows, newsletters, Twitter accounts, and other content creators that are putting out really interesting, real-time, thoughtful analysis on this stuff that it can suck you in. I mean, on election day. We have a dozen different screens going with different things that we're looking at, and really it's election day now every day from about a week ago through November 5th. So it's frenetic, but if you're into that kind of constant stream of sometimes conflicting and obviously ideologically driven information, and want to try and find a way that you can tease some actionable signal out of it, then this is the field for you.
Well, it's interesting. That's very much what I try to do with this podcast in part. Not always successfully, but so how does it work, your site? So are you basically like a broker dealer for institutional investors who say like, hey, there's this outcome I want to hedge against, and you create like are these structured notes, or how does that work?
No, they're structured basically as binary swaps that we serve as the central counterparty to. So we're not offering any brokerage services. We effectively operate as a swap dealer for the technical term for these qualified investors are eligible contract participants. So it's folks that are legally able to engage in OTC swap products.
Right.
But again, structurally, they don't differ really from what you'd see traded on a Kalshi or predicted, and that they are binary outcomes that are denominated in lots of $1 and priced at between 1 and 99 cents. Or actually, in our case, we have a 1,000 price points. Some of the markets have 1,000, some have 100. So in other words, whole penny pricing or tenth of a penny pricing. And so if you wanted to say, take a position for a potential payout of $10,000 that the Fed will do a double, rate cut at the November meeting, you could, if you were a user, you would initiate that by bidding on that contract on our site. I mean, post being onboarded and qualified as an eligible trader, and say, okay, I want the $10,000 exposure, and I'm going to bid 35 cents on the dollar, for a cost of 3,500 and a potential payout of 10,000. We then might, if that's a acceptable price, fill the order. In which case you have a position with us, the counterparty, or we might ignore it if we feel it's a bad faith, just sort of probative, bid, bidding a penny on something that's quite likely to happen, for instance. Or if it's sort of close, it's in the ballpark, then we might send a counter offer, which you receive, and say, oh, okay, not 35, but 38, fine. Or I want to rebid 38, or maybe I don't want to go quite that high, but I'll rebid at 37. But so again, one of the other ways that it significantly differs from what people probably have seen in other prediction markets is that we're not then publishing an order book. There's no trader to trader communication. We're not matching orders between traders. And we really don't put out much, if any, actual pricing information. We used to put out kind of a delayed aggregate representative price as sort of a guidepost for where people would think about bidding on things where they might not have a strong prior as to where it should be priced. But we found that we had to obscure it so much and make it so delayed and aggregated that it wasn't useful to people. So we really I'm sure it's frustrating for those who are looking at the site and hoping for it to be more of an informational outlet, the way that anyone can go to Polymarket, Kalshi, predict it, and consume the data and potentially make actual business or household decisions based on that data without even participating in the markets. Not really the case with our platform, but certainly is the case on the Supermodel site, because that's exactly what we're trying to aggregate and provide the best single measurement of, is all of that public facing. So it's sort of quite the opposite from our our actual OTC platform.
Yeah.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information.
One thing we haven't talked about much is a possibility of a contested election. I guess we talked about it a bit, but that was obviously a big story back in 2020. And it seemed the prevailing sentiment seems to be that if Trump wins, then the Democratic Party will just kind of fold up their tents and go home and concede and stuff.
Mm-hmm.
And is there no chance that you're seeing, or no concern that you're seeing, that may not be the case, and that they may also try to contest things, depending on how close it is, I guess?
Yeah, I have no doubt that if it's close, either side, whichever appears to be the losing side, will try hard to contest it. And in fact, even the winning side, if it's close, may go and try and contest swing states where they narrowly lost for fear of potentially losing one or more of their winning states and having the election swing.
Oh, yeah.
So yeah, I would be shocked if you don't have both sides mounting some kind of challenges immediately after election day, likely in multiple states. And whether they have merit or not, or whether they go anywhere or not, is obviously a whole other question. I mean, I think virtually everyone would agree that we are hoping not to have a long, protracted, overtime session here, extra innings, if you will. But it's nothing new, and I don't think the Democrats can claim quite the clean hands or pure hearts that they would like to post January 6, 2021, because I mean, going back to 2000, you had sort of the most protracted battle with Gore, Bush v. Gore, when it went to the Supreme Court, obviously over the Florida outcome. So Democrats like to contest close elections too, and for good reason. There are huge outcomes, huge implications to these outcomes. So no, I don't think just because January 6th and the aftermath have been such a talking point in this election, and democracy being on the ballot and all, is going to give them any pause to mount a very vigorous campaign to challenge the results in any state where they feel they have a plausible case to make, with the caveat that assuming that there is any meaningful chance that overturning those outcomes in one or more states would actually swing the overall electoral college vote. Hopefully that turns out to simply be a matter of legal wrangling. Maybe it just means we won't know for 2 days, 3 days, a week, 2 weeks after election day who the actual winner is, should it be close. And hopefully it's not the kind of thing where we get into actual constitutional crises of, who has the courage or the ability to do certain things that are, more clearly coloring outside the lines. I'm not too bothered by a protracted outcome more along the lines of 2000, although hopefully not that long. But just again, it's our perverse incentive to have not chaos, but volatility and uncertainty in an outcome. We'd like orderly uncertainty, because that's sort of our stock in trade is again, selling a hedge against the risk of that uncertainty of outcome. So to that extent, extra innings are something we don't particularly mind from a purely economic standpoint. But again, that's with the caveat that it not be the kind of chaotic constitutional crisis that could attend such things. But time will tell. Again, that's all premised on the idea that the race is close enough to be meaningfully, plausibly contestable in the legal process thereafter. And I don't think we really know enough, even though we've seen these things tend to trade at 50-50 most of the cycle. We've seen the polling tend to bop around the 2% Democratic lead-ish that Clinton wound up with, which was not enough to win. So even though most of these indicators do suggest a close election, there's so much out there that it's unknowable. Is the polling any good? Are markets being manipulated? Are Trump voters shy anymore? What does it mean when an incumbent president withdraws from a race right before the convention? I mean, there's so many things that are, I think, truly unknowable to anyone who's being honest about it. And yet, as soon as we know the outcome, it's going to just be so utterly obvious to everyone. Yeah. Should Harris lose? It'll be, well, of course she lost, because we've never had such a thing happen where everyone knew that Biden couldn't run. She knew Biden couldn't run and wasn't honest about it. And then he, withdrew 3 months before the election. She never stood a chance. Or, should she win? It'll be, well, of course she was going to win. Trump led an insurrection. How could they possibly ever think of putting it? So, everyone's going to immediately learn this lesson that they, of course, already knew all along, no matter what happens. But I think there is so much that's opaque to us that to say that, to note the obvious outcome ahead of time is a lot more difficult. And yet again, back to the theme here, that's exactly what these big traders on prediction markets are trying to do. They're saying, now this thing is 60-40, and yet I want to go put $1 million behind Trump at that price, or likewise on the other side. For each trader on one side, there's one on the other side with the same size position. So it's very hard to do reliably. Doesn't stop people from trying. And we'll have a lot more data, in about 2 weeks, or say 2 to 4 weeks, to look back on and actually score some of these forecasts, the markets versus the pollsters versus the forecasters, and see who's an utter genius and who has egg on their face when it could come down to 10,000 votes in Michigan. And we always tend to overlearn these lessons, but it makes it exciting.
But you don't seem particularly concerned that this is going to devolve into some kind of crisis.
I wouldn't say I'm without concern. It's not my base case, in part just because I do think it's likely that it won't. I think it's less likely that it's going to be razor thin than I think is the conventional wisdom. And razor thin, that's what puts us in a situation where you may have actual chaotic, more crisis-y aftermath and societal unrest and things like that no one wants. But again, just given the degree to which so many of these macro factors are opaque, this first fully post-COVID election, no incumbent and yet 2 quasi-incumbents in the current vice president and the immediately outgoing president. The assassination attempts, the late with Biden withdrawal, instability overseas, so much could change in literally the next 2 weeks that I think the odds of it turning out to be a razor-thin election, as we've sort of gotten used to being the base case, is actually less likely than people think on either side. Now, again, look, as I've been saying, the momentum clearly seems to be in Trump's direction. He's got all the tailwinds the last week or two. But I don't discount the possibility that it's an outsized Harris win. Now people are much happier to tell pollsters they're backing Trump, or the pollsters have overcorrected and Harris is actually ahead by 5, right? And Trump does something asinine in the next several days, or Harris, does something heroic and she wins, a relative landslide. Any of these things are plausible, and I think more likely than frankly, the markets or forecasters are indicating. I don't think 50-50 pricing, and this I have to credit one of our co-authors at the Supermodel, Harry Crane, tipped me to this theory that he'd been kind of noodling with, which is that 50-50 odds on the market do not suggest, and I may mention something about this earlier, do not necessarily suggest a close race. They may just mean that traders have no idea and they're defaulting back to the naive odds of 50-50 when you've got 2 candidates and you don't know anything else.
And
it's
that's
hard,
reality
it's hard
right
to disentangle
now.
those two.
Exactly. Last question. Let's assume that there is, just play this out here, and Trump wins, and the Republicans win Congress, both houses. What do you tell the Democrats in terms of how to do things differently next time?
Well, I mean, the big one, and again, as I said, everyone will be a genius in retrospect, and this will, I think, be the major headline in any Democratic autopsy, but I think it's actually will be a good one we can identify ahead of time, is that it was keeping Biden on the ticket for so long. It was the absolute defiance of what was plain for everyone to see for so long that it eroded enough trust. But I think people, at least Democrats, were sort of happy to go along and say, okay, fine, sure, the facade is holding enough here, but we kind of all know what's going on. There was setting that debate in June, much earlier than usual, with then still, 4.5 months to go before Election Day, meant that once the debate went how it went, that die was cast, right? So yes, it was only 3 weeks later that he withdrew, but that's 3 critical weeks when you're talking about then a general election campaign that there's only 3 more months of after Harris takes over, or less even after she became the official nominee. So 3 weeks, as we've been saying here, that's kind of the moral of the story. That's an eternity in politics. If they had those 3 weeks back and could have done a more staged managed withdrawal, or ideally do way, way, way before the debate, because it wasn't like the debate performance was the first time that Pelosi or Schumer or Jeffries or Harris saw that Biden. As Clooney came out with his op-ed and said, no, that's the guy we saw at the fundraiser, and we've been kind of privately panicking behind the scenes. So if you wanted to give sort of what's the advice post-election should Harris lose to the Democrats, it's when something's staring you in the face that obvious, and it's clearly the center's not going to hold, right? He was not going to for 4.5 months. If he's regularly in that kind of a shape, be able to make it. You can't drag him across the finish line to election day. Even if you could, I'd argue it's a bad idea to do so. If you're dragging someone,
made for some great memes, though.
Indeed. But I think that's sort of the most obvious thing, and that'll be sort of the what people take away from this and remember in future cycles is if Harris loses, and it's a shame for Biden and his legacy too, because they will pin that on him. I don't think a lot of blame is going to be put on Harris. Some will, and some will be deserved, would be deserved. Again, this is all premised on her losing. She's not been a great candidate, and she thought she could kind of just hide from the press and go on vibes to election day, and has had to emerge a bit. And that more recent emergence isn't going so well. It is based on polling and market prices. But that ultimately was the central failure of the Democrats' campaign here. It was the key decision makers obviously knew well before the debate Biden was not in shape to handle the campaign or a second term. And when they knew that, they should have had that hard conversation, that hard series of conversations that they had in early to mid-July. They should have had them in January, February of this year so that they could have avoided the whole thing.
Yeah. Well, I don't think this is a partisan comment, but one hopes that if nothing else, this leads to younger men and women becoming the nominees of the major parties.
That would be great.
I would suspect that may be what happens.
Yep.
Possibly. But we shall see. A lot of unknowns out there. Flip, Pidot, thank you so much for joining the Contrarian Investor Podcast today.
It's been a pleasure. Thanks for having me.
Yeah, wonderful stuff. In closing, maybe you could just tell our listeners how they can find out more about you, where you are on the social medias and such. I will put that information in the show notes along with the links to your website.
Sure. I'm on Twitter at FlipPidot, FlipPidot. Our website, American Civics Exchange, is at amciv.com, and the supermodel is at thesupermodel.com.
Cool. Do you ever get any people looking for like supermodels there rather than political?
Probably get some people stumbling on the site by accident.
Yeah. Very cool. Awesome. Thank you to Flip. Thank you all for listening. We'll be back here again next week with more talk about the election. Speak then. Bye, everybody.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.